Welcome back to Trilogy's channel. So today I'm going to talk about a topic that I said I'd be speaking about in the last few videos, and something I think is important to highlight given the state of where we are in the market. It's a topic that I've been asked about by a lot of customers and friends of mine of late, and that is the watch market as a whole, where prices are, where we think prices are going to go, and what to do in the short to long term. So it's no secret that watch prices have been dipping over the last 2-3 months or so. There's a number of reasons for this, but I don't think it's a massive reason to panic. If you're holding something that you bought in the last sort of 6 months, maybe you've seen the prices getting advertised for a bit less than you paid. It's not a big deal as long as you're in it for the long term, but I thought I'd make this video to sort of give my views on it, as I do always talk about investments, and it'd be wrong of me to shy away from the market now we're in a correction. So here I am. Unless you've been living under a rock, you would have seen how prices have gone in the last few years. Watch dealing as a whole hasn't been too difficult in the last 2-3 years. Prices have been rising at a rate we've never seen before. It's been great. As a watch dealer, it's been great. If you're sitting on an asset that is constantly rising in price, it's really good. It has also brought some negatives, which I'm going to talk about too. So obviously the converse will happen. The negatives that have come out will then become positives, and the positives negative. But in the long term, I think we're all going to be okay. As a stockholder, it was great to see the asset that I was so heavily invested in going up week on week. My favourite activity at the start of this year was coming into the shop and having to adjust my prices to market price. We was just seeing margins and profits increasing on a daily basis. It was a lot of fun. Although on the other hand now, my least favourite activity at work is having to come in and decrease my prices, just seeing it all dwindle at the same time. But obviously it was unsustainable. There were some watches that were going up 5 to 10 grand a week, and it's impossible for something like that to continue forever. But this wasn't the case across the whole market. Some models were hyped a lot more than others. Some of them I'm going to delve into in a bit, but I'm sure most of you know which ones have been pumped a bit too much. And some of them have really just risen steadily. And the ones that have risen steadily and risen at a sustainable rate haven't really dropped as much. And that's true of all markets. Something's got to go up more gradually in order to sustain a certain price, as opposed to just shooting up like you see something like GameStop or something in the start of last year. Obviously price rises are good for big stockholders, but I do think it also brought a lot of negatives into the watch world. It was very, very easy sort of during COVID and post-COVID for anyone to call themselves a watch dealer and become a watch dealer as it's known. The government was giving out free money off the back of COVID, and prices were constantly rising as there was no supply globally, and prices were rising. So someone would go out, borrow some money from the government, buy a couple of Datejust, sit on them, let the price rise, and sell them on. All of a sudden, they're a watch dealer. They do this without VAT number, without a premises, without insurance, and most importantly, without the resources to stand on a deal. So if something goes wrong when they're brokering from one guy to another, and say that watch turns out to be a problem, they don't have the resources to then refund. I've heard a lot of horror stories about this. One such story is that one of these cowboys brokered a deal on a Datejust from one guy to another guy, calling himself the watch dealer in the middle of it, and that watch actually turned out to be fake. The client tried to return it, the guy didn't have the money, and obviously the guy who sold it to him was nowhere to be found. So the client actually took the loss of £8,000 because he bought from someone unreputable, which is why I always recommend buying from a recommended and trusted dealer. It doesn't have to be me, I don't really care about that, but as long as it's buying off someone trusted with a premises, with knowledge and history behind it, and if anything ever went wrong, you know where they are and they'll be able to help you out or do anything that needs to be done to rectify the issue at hand. Whereas a lot of these people who are fly-by-night dealers, as I call them, they just appeared out of nowhere, have come into the market, been putting their money into the watches. A very easy investable asset, very easy to get into, low barriers to entry, as long as you have the money. Watching that go up, and all of a sudden they're a dealer now. And we've seen it time and time again, and there's a big complaint across the group chats and across the dealer network, how everyone is now a watch dealer. Apparently it's the new hot topic. But we'll probably see a lot less of that now. Prices are falling and it's no longer easy. And I think only the good dealers and the ones who are really invested in it are going to be here for the long term, as people don't want to be in it. It's not easy now, and there's a lot of hard work that goes into it. So that's one good positive. I think we're going to get a lot less of the bad dealers, a lot less of the cowboys, and the people who are out here not really operating in the way they should do. So let's dive into the correction that we're currently seeing and the few reasons behind it. It is a broad market correction, but as I said, it's affected some models more than others. As I said, there's some hyped models, but there are a few interesting reasons. Obviously, the watch market is a global market. It's affected by macroeconomic factors, of which there's been a perfect storm for this rising price to start dropping off. The first one, which is obviously a major one, China, earlier this year, went back into a lockdown. The two major cities, Shanghai and Beijing, complete lockdown due to China's zero COVID policy, which has affected business globally, manufacturing and other businesses and sales. And China is the largest market by population in the world, as well as the largest market for luxury goods. Obviously, the watches are a luxury good, and China were the biggest buyers. If you take out a population of 1.4 billion, obviously they're not all luxury market buyers. If you take out the biggest market, obviously supply is going to increase as this market is no longer buying and purchasing these. So the demand from there is decreased, so the watches aren't getting sold in China, leading to a greater supply globally. And obviously with market forces, supply has risen and demand has dropped, therefore the price will start to dwindle. However, China is starting to come out of lockdowns. We should see some growth there and some reversal on this current trend. The second one, obviously the war in Europe. The war not only affects the Russians, obviously people in Europe and globally are now postponing investment in assets due to the macroeconomic uncertainty and the uncertainty of a war so close on our doorstep in the West. So people are definitely being a lot more cautious. Obviously we've got the cost of living crisis which is going on, partly due to the war and partly due to other factors, which has led to energy and gas prices going up to levels we've not seen due to the high inflation rate as well. So people's pockets are definitely feeling the squeeze, and where we're in a luxury sector and not a necessity, people are choosing not to invest in luxury watches at this time. But I think the initial shock of the war has started to level off a little bit, but I don't really want to get into that because it's not really what we're here to talk about. As well, inflation is at the highest record we've ever seen in 40 years. Things are going up, things are getting far too expensive for people, which has led to interest rates being risen by the Bank of England and globally other central banks, which has obviously left an even deeper hit on people's pockets. People are starting to think, do we need to buy that? Do we need to buy this? And feeling the squeeze. So at the top end of the market, we're going to be hit first. So obviously, because of all these reasons, people are looking to free up capital, free up cash by selling non-necessities such as watches. Obviously, if enough people do that, the supply will then increase even more so, given the other factors. And obviously, when supply rises on a supply and demand curve, the price will fall, which is exactly what's happened. So people are freeing up assets in order to freeing up cash from assets in order to pay for other necessities of life. Personally, I think it's definitely the worst time to sell now, but obviously if you need to sell, then do sell. And I do think some bargains can be had out there on the market. So this is just a few reasons that we've seen a bit of a price correction in the market, but a lot of them, I think you'd agree, are sort of short-termist. Obviously we can't see how long the war's going to go on for, but China's coming out of lockdown. The uncertainty in the market is definitely still there. Confidence is low. However, obviously it won't continue that way for forever. So definitely will improve at some point. So now let's talk about some of the watches. As I said, some watches have been hit more than others. As I said, some of the watches that have jumped up a lot, been hyped a lot, have obviously seen corrections. But I think what we need to really bear in mind is what we call a correction. Just because something has dropped in price doesn't mean it hasn't been a good investment over a period. Take for example the Patek Philippe 5990 Nautilus. 5 years ago, this watch was trading for around £40,000. I know people who bought for that and sold for that at that time. And then earlier this year, after its discontinuation, it jumped up to £300,000. And now it's sort of sitting like just sub 200. And while 200 isn't as good as 300, naturally, if you invested 40k into it and you could sell for 200k, that is a 500% return in 5 years, which is absolutely incredible by any investment standards. So all you have to do, really, when you're thinking about this, is don't think you've lost 100k, think you've made 160. If you've bought right, then you can always sell right. That's really what I think. I mean, what I like to think with the market, like with the stock market and the watch market, it's similar. Like don't panic in the short term. It's all okay. All you need to do is zoom out. If you zoom out on the graph and zoom out on the prices, if you look at 5 years, 10 years, 50 years, and the long-term trend is going up, and history will repeat itself. Moving into Rolex, other watches that we've seen have sort of been hyped, as I call them, hype watches, ones that have been pumped a bit too much and have risen too much, would be things like the Olive. We've got one here with diamond bezel. They're still a good buy, definitely, but they go a bit mental. A few years ago, I was buying them, when was this? 2019. I was buying them for 20k, 22k, and they've went all the way up to 75k earlier this year, which is really high for a current production model. Obviously, it is an anniversary dial, but it is still a very high price. They're now trading for new ones around the 60k figure or 70k for the diamond bezel one that we have here. So as I said, if you've bought right, in the last 5 years or so, then you're obviously you've seen your profit dwindle a bit. However, it's still a good watch to be in, and it will get discontinued, at which point it will start rising again. But one thing I would recommend when you're looking to buy watches is don't get pulled into all the hype. There's things that just get hyped for no reason. It's quite illogical and doesn't make a lot of sense, and those are the ones that are getting hit the hardest. One watch that has really sort of stayed at a stable rate and would be the Rolex Datejust in any size really. Datejust 41, Datejust 36, doesn't really matter. They have risen slow and steady forever since they was released in the 50s, constantly just slowly rising, a couple of percent a year, up to 10% a year, but we've seen 20% in a month on some of these models. And they have risen at that rate for 50 years historically, and have done so this year, and are continuing to rise now. They haven't dropped because it's sustainable. Sustainable rises in value is what we want. It's absolutely the place to be. They just haven't dropped, and they're a really good model. If you compare that to something like the OP41 turquoise dial, it's not a Tiffany dial. People call it a Tiffany dial because of the 5711. You compare it to that is a $5 retail watch, jumped up to 35 grand for what? Dealers hyping it, and that people ended up getting burned with that one. I stayed out of the ring of that because I knew it was all not true. It's literally a time complication only. At least on the Datejust, you got the date complication, a lot of history behind it. You got the white gold bezel if you want that, the fluted bezel obviously, Jubilee bracelet. Nice few configurations and dials, whereas the turquoise was just a hype, and it has dropped off, and I feel bad for the people that bought at 35k. But it's become a speculative market, and a lot of people buying into the market based off of that speculation and the greater fool theory, which, if you don't know what that is, it's buying something today. It's a term used in the stock market. It's buying something today with the hope that in the future someone is going to take that off you for more. Not because the intrinsic value is greater, just because a greater fool will come along and take that piece off of you. Obviously, I'm a big stockholder of watches. My entire net worth is pretty much in watches, nearly. And we've got over 200 in stock. I have obviously seen, as I mentioned at the start of the video, my prices fall slightly, and obviously the asset value has decreased. But if I compare that to the asset value of the same time last year, it's still massively up. So you can't panic in the short term if you're thinking long term. I've got a long-termist approach, especially in the watch market and other markets. You can't live a life and invest in the short term because it's far too risky. If you're looking for a 2-month flip, 3-month flip, watches is not right for you. Really, you need to be thinking, as I always tell people who are looking to invest in the market, you need to be thinking long term, 2 years, medium to long term, 2 years plus, 5 years is even better, 10 years is even better. So that's how I look at it. So I'm not panicking, I'm not too bothered about the short-term corrections in price. I'm still going to keep buying, still here to take your advice, still here to give advice on the market. And yeah, I'm always buying. So if you've got any deals, please do give me a call. Let me know what you think about the state of the market and where you think it's going. What's been your best investment? Have you picked up anything cheap at the moment, and anything you're keeping your eye on? And yeah, I'd be interested to hear all your thoughts. And don't forget, if you're looking for a new watch, remember to phone Frankie first.